Mic check, 1 2 1 2, CTM. Happy Monday morning. Jeffrey, thank you for the assist on that. What's going on, everyone? I hope you're well. We have an unscheduled broadcast today, an hour earlier than our normally live stream sessions. I went ahead last night, I hope you saw it, and let everyone know inside the announcement channel of the Discord. It is a good morning. Wherever you are in the world right now, good morning, good afternoon, good evening. If you're watching this live right here with me or on the replay, it is good that you're here. I am so glad that you are here, and I am so glad to be with you. That's right, putting in the work, doing what we do best. There's a reason that we have come so far and that we continue to progress. And it's simply because no matter what's going on, we have our heads down each and every day, putting the work in. It's a passion. There's no question about that. It pays dividends. The fruits are abundant. It is a joy and an honor to be here with all of you. I missed you over the weekend. I'm glad for this week. The first few days are going to be, well, we always put in strong sessions. There's no question about that. It will be until either Thursday or Friday that I get to, inside the member area, put in the alternative view so that you have we call it like the lower pane view. So you could see, for example, as Ethereum is currently holding this open position, its open position is about 1% against it in unrealized loss. And you could see how far or how close it is away from exiting that position. And even though the stop loss is 12% on Ethereum, you could see that it's very close to actually exiting that position. And the way that the strategies are designed specifically here on Ethereum is that it is meant to exit well ahead of the safety stop loss. I think going back to Ethereum's inception, October something or other 2015, there have been a few trades that have exited 10-11% loss. I think the average trade on Ethereum averages somewhere around 3 or 4%, 3.5% loss. Nevertheless, I want to talk a little bit as we get going into this session regarding the differences in Bitcoin and Ethereum. But first, I just wanted to let you know it will be around the end of the week where I'm able to go ahead and make those new additions to the dashboard that I want to have in here. And that is you able to see the different views, right? Right now, if you click on any one of these links, you're going to see this view over here, which I happen to love. I've grown accustomed to, but I consult them both all the time. I want you to be able to. So we'll have also the alternative views for you to be able, not only on the 8-hour and also on the daily. In the meantime, if you want to go ahead and do that yourself, simply click on these 3 buttons here for more and just click move pane below. Once you move the pane below, click on the settings, go into style, just click on long deviation, click on short deviation. You can make these a little bit bolder if you prefer. You could just go bolder. And then the only other thing that I want you to make sure you do is go down over here to the 0 line and go ahead and add that in. And then you could do that right now, and you could do that also on the stocks. But I'll make it easier because we're all about like just details and doing everything we can the best we can. I was checking in on some comments here this morning as we get going, and I wanted to make sure that we had voice. Yeah, for sure. So you could see here on Ethereum, the question is, right, well, how do you know when you're getting close to an exit? Because if you're looking at this right here, you know that you have a safety stop loss in of 12% on our Ethereum position. By the way, just really quick as we answer that question, I just want to make sure that we understand current CTM positioning. Ethereum is holding an open long trade. It is currently minus 1.3% against it in unrealized loss. Cardano is holding an open trade that is currently 0.5% for it in unrealized gain. And Bitcoin is currently on the sidelines And that right there, my friends, is the beautiful dance. It is the ideal portfolio. It is including obviously instruments with high volume so that you could trade them. You're looking at, while Bitcoin is on the sidelines, nice January, and now on the sidelines waiting. Are we going up or are we going down? By the way, markets right now are waiting for Powell, who takes the mic tomorrow. Like it or not, this is a central banking system, centrally focused, right? But Bitcoin is decentralized and it should have no bearing on what, no, the US dollar is the reserve currency of the world. Therefore, what the Federal Reserve, the central bank of the dollar, how it dictates policy, has enormous ramifications across all of the financial system. And Bitcoin is not immune. Bitcoin has grown into, let's say, a high enough market cap where the macro actually matters more than ever. Powell speaking tomorrow. Ahead of that speech, people are wondering whether or not he's going to channel any type of Jackson Hole type energy and whether or not he's going to set the market straight about and correct them, right, on their understanding of what they've seen and heard or not. Maybe Powell, if it'd be obviously the last FOMC meeting on last Wednesday was interpreted as quite dovish, even though there was a 25 basis point hike. Powell could continue that line of thinking. So tomorrow, there will be a lot more clarity. Coming into that uncertainty, CTM positioned, this is the beautiful dance, neutral on Bitcoin. It could go either which way, right? Ethereum is holding on to an open long, and that's in loss. And Cardano is holding on to an open long, which is into profit. So that's the beautiful dance right there. And you could see that Cardano is not yet even close to exiting that trade. Do you see how far above both these deviations are from the zero line? So it's not really yet close to yet exiting this current long that it's holding. Ethereum, on the other hand, the difference is, do you see this deviation down here? The one highlighted in green is very close to actually crossing over that zero line. If one of those two deviations close below that zero line while holding an open long position, the trade will exit well ahead of the stop loss. It'll get outside the market. Now, inversely, if you were short, if you were holding a short position and both those deviations are below the zero line, if one pops up above it, that will exit the short ahead of the stop loss. You could see that Bitcoin is very close to entering a long trade. If we see momentum kick up to the upside, at that point, Bitcoin would be entering long. It's still got a ways to go before it would be interested in taking any short side trades. So right now, momentum is to the upside. If we're going to start pivoting short or taking any short trades, we're going to need to see momentum roll over, right? One trading day after the jobs report does not make a market. So we continue on. Great morning, everyone, at this new time. So I hope that does a good job in helping you understand a little bit more. And that's what we're here to do, is to continue that constant growth. 1% growth in a week is going to pay massive compounded gains at the end of the year. 1% a day, forget about it. It's ridiculous. We always want to be moving forward. Now moving over to CTM positioning on the daily time frame, we see that all three, right? This is the daily time frame. This time frame is super easy to execute off of. There is say 12 trades a year where you get an alert onto your trading app and it lets you know that you have to either enter or exit a position. It's very easy for a busy mom. It's very easy for a surgeon or anyone to be able to execute. Now, the 8 hour, the profits are significantly higher. And it takes a lot more work and a lot more dedication. A lot of people are willing to do whatever it takes, right? And the returns here are quite substantial. This is more than enough to get it done. So Ethereum on the daily is holding an open position, taking early January, 31% into profit. Bitcoin, the importance here is that as we saw this momentum shift to the upside, that CTM on the daily into the trade and capitalizing in on it, right? You could do buy side only. Buy and sell side is more profitable, whether you're looking at the daily or the 8 hour. If you look at Bitcoin on the daily, same thing, early January or the middle of January, entering the market, holding an open position, 21% into profit. And Cardano is, after taking a small loss in January, right? It took its second entry. It's currently holding, beginning to build a position, 5% into profit. Awesome. That's what we want. Great morning. Is 85% a year achievable moving forward with CTM 2.0? So what instrument are you talking about, and what time frame? And are you talking on the buy side or the buy and sell side? It makes a lot of difference. If you look here on Ethereum, right, and you're looking what this looks like over the past 3 years, you can see that, well, the drawdown on the daily, this is trading both sides, has a 17% drawdown. And you have to understand that past performance no way indicates future results, right? This is all for educational purposes, to give us tools to build tools to help us going forward. Now, since we've been forward testing, our performance continues to outperform. And each day and each week and each month now that continues to pass by, it's more and more. We'll talk about that as we get closer to the end of the session here, as I wanted to talk about Bitcoin and I wanted to talk about various candidates that we've had. And now that they've all been forward testing for quite a while, we'll take a look at that in just a little bit. But let me continue over here. If you're looking at Ethereum, and this is the buy and sell side, right? So if you're just trading the buy side only on Ethereum the last 3 years, and you're looking at a drawdown of 17% and a return of 1900%, is it averaging 85% year over year? Well, over that long time frame it is. What happens over the last 2 years? Has it been? That's on the buy side only. Don't forget, well, it's clearly not averaging 85%. It's averaging over 2 years 50% on the buy side. The buy and sell side, it's going to be making it. This is the daily time frame. On the buy and sell side, it's hitting that average over 2 years, 100% a year, right? But on the buy side only, it's not. We looked at 2022 was largely down. Instead of averaging that 85% a year, it's really largely preserving capital. It's largely preserving capital. And if you go back to 2022 alone, you could see that you're not even close. If you're looking for 85% a year, it's only 20%. But it's buy side only. You're preserving your capital. Buy and sell side, once again, you're close to making that over that 1 year. You didn't hit your goal. That's a loftily goal, 85%. That is like 30% in a year in the markets is bazooka great. You're looking at trading, on the daily time frame, looking to put up is it possible? If you go back and you look over the year and you average over a few years, it's more than possible. If you're trading both sides, it's likely. If you're trading on the buy side only over a period of whether you're looking at, you're not going to hit it every year, but over a series of years, certain years have more gains than others. There's a good chance that you'd be averaging that. That's on the daily time frame, right? If you're looking at the 8 hour, it's significantly different. It requires more, let's say, more trades. It requires sometime getting up at 2 in the morning. It requires a lot more effort. If you look back over the 3 years, you're looking at an 18,000% return. What's the drawdown? 18%. What about if it's buy side only? Buy side only is 6,600. Well, what about over the last 2 years? On the buy side only, that's averaging well over the 85% goal that you're setting. That's crazy goal. 85, if you're trading both sides over the past 2 years, yeah, I think look at the drawdown, 18%, you're more than getting it done. Well, what about over the last year, right? If you're looking at the last year and you're looking at trading both sides, well, you're getting it done, right? What about on the short side, on the long side only? You got it done also. So some people are willing to go ahead and do it. Look at the drawdown, 7%. What was the drawdown on both sides? 12%. Some people are willing to do whatever it takes, and that includes when they're close to a signal, getting up at 1 o'clock in the morning for those type of potential gains. For other people trading on the daily time frame, well, that makes a lot of sense, you know? And you have to decide. You can't be like starry-eyed, only focused on returns, because once you have strategies in place, what you're looking at is execution, and execution is everything. And for a lot of people, executing once a day on the daily time frame is going to be a lot more consistent and easy to do. Now, there's a multitude of you who have been doing it and are able to do it on the 8-hour, myself included. And again, there are other people that are willing to devote that time. You can see the difference. Now, I mean, again, you have to all like bring it back to reality. We're looking at like CTM 2.0 solutions. So when you like to even ask the question, is 85% even possible? If you look at someone else, come on, of course not, you know? So we have to keep that grounded and in perspective at all. Bazooka, right? Oh, we got a new, Brett, you got to, head snack, you got to wait for the 2024 or the next bull market, you know? You got to wait for them for the release. Buy side only, no leverage is more than enough to get it done. Did you see? Because this is crazy if you're looking back on Ethereum. Like I'm going back to 2020 when I show you this, right? Hold on one second. This is just for fun, for like that return is absolutely just ridiculous. And if you go back further and you give it more time to compound, you get 2019. And you go add in 2018, this is from the top of a bear market. You know, look at that return. Forget 2017. It's just like, but 2018 is totally ridiculous beyond belief. But if you were to add in leverage, and if you were to add in like, let me show you the difference between 1.15 type leverage. That's 1.15. That's lightly leveraged in my opinion. And now you're look at the gain. Look at the drawdown. Is that acceptable? For a lot of people, that would be a dream. But the overall return, did you see the difference? It doubled. So what about something that's like highly leveraged, max leverage, I would assume 1.5. You have people out there doing like 3 times leverage. CME does 5 times leverage. You have people out there doing 20 times, 100 times. This is 1.5 times leverage. And did you see the difference in the return? The drawdown 33%, but do you see that return? That's a 6 million without leverage is insanity. And we're looking to do this, right? No leverage is needed when you have these type of solutions and strategies in place. Buy side only, more than enough to get it done. All right. Once a day, dollar cost averaging is maybe a better option. Our fees are really high. Yep. So some people might be using something like Coinbase. And Coinbase has really high fees, right? 0.5%. And there's less trading, there's less trades. And if you're looking at the daily time frame as a solution and you're looking to dollar cost average in, like just on the buy side, and when you don't have a signal, you're simply looking to preserve capital, it's an amazing strategy, right? Let me go back. Let's look. This is from 2001 on Bitcoin. Let me just jump this up a little bit over here. And let me do buy side only. This is buy and sell side, right? So look, that's 64%. Look what it did throughout 2022. There was one trade. It was a loss of like 4%, 3.5% right here in March into April. The rest of the year, instead of dollar cost averaging into Bitcoin, You're dollar cost averaging into your fiat account. You're holding and preserving that purchasing power. If you hold, and you're dollar cost averaging into Bitcoin, it's still a good long-term strategy, I think. And you're lowering your average cost. There's no question about that. And some of you, like Headstack, making some really good purchases at extra, higher amounts as price was lower, it really helped bring down your average cost, overall cost of price. But if you're dollar cost averaging into your account, into dollars, into euros, whatever it may be the whole time, and then you get ready for the next buy signal, all that capital has been preserved, and now you're in a trade 22%. It takes from a 75% drawdown, you need a 300% gain just to get back to break even. If you're only at a 4% loss, it only took you four and a quarter to get back to break even, 22%. It's a good strategy. I think that I see a lot of people out there, proponents of a dollar cost average strategy. I used to be. This is far superior. We call it dollar cost averaging plus strategy. All right, let's keep going. Let's get into the session here today. So that's the positioning though for CTM across the board, right? And we got, by the way, Tesla since 2023, CTM in early January, focusing our attention as crypto strategies are lock stock, focusing on the stock market, and able to add a few different strategies: Tesla, TQQQ, and the FNGU. These three, and Tesla holding its first trade. It's holding its first trade now, 11.9% into profit, and that's beautiful. Maybe it's a second trade, right? If I come to the list of trades, you could see that the trade before it took a minus 1% loss. We weren't maybe we were trading it, maybe 0.28% loss. We weren't part of this one, though. I don't believe we took part in that 16% gain. This is the first series of trades on Tesla. This is for sure the first trades taken on TQQQ, and that just locked in a trade of 8% here, and that's beautiful. Look, CTM 2.0, holding and pushing trades and letting go of the losers. It's how we do it, and it's beautiful. And this one I did not participate in. I know some of you did because it was ready. The first CTM trade on the FNQU was a monster 31% trade. We were not taking this trade over here. This is when it was just kind of launched over here, 31%. And we're looking at crypto style gains now in the stock market. It's a beautiful thing, and I'm looking forward. I knew as we were closing up 2000, TSLL is leveraged. Yep, that's 1.5 leverage. Let me jump back over to Tesla. We have the solution here for both. And if you're using TSLL, you'll see it's holding an open position instead of 11.5% into profit, 17.1% into profit, right? So it's a good, this ETF hasn't been around too long. It hasn't been around too long at all. So we're only able to go back a certain amount of time but it is the same settings that we use on Tesla, on TSLA. And, it's experimental. It's new. We're watching it. We're monitoring it. There's no rush. There's absolutely no rush. To me, it looks like it just completely, and if I go over a list of trades for each, that is just tracking the same thing that Tesla's doing. It's only doing it at 1.5 leverage. Woo! I'm not exactly sure what TQQQ stands for. QQQ is like an ETF that tracks the tech, right? That tracks off the NASDAQ. If you search QQQ, and you could look at the makeup of the QQQ, and this is a 3 times leverage. TQQQ, it stands for turbo. No, I don't know if it stands for turbo or tremendous or whatever have you, but it's a 3-time leverage ETF of the QQQ. Powell on deck tomorrow. We'll see what happens. We'll take it off there. Jordan, this is like frequently asked questions section. We have, by the way, let me just jump forward. This is a pretty amazingly awesome. This morning, within CTM, someone messaging me talking about, listen, I would really like to be able to contribute to CTM. I thought that if I go ahead and I include nuggets, right, and I go and I find the video clips where you're discussing certain things and label them, I could then go ahead and send them into the new Discord channel nuggets. And then also on the website, we could create a frequently asked questions section that will be searchable. This is enormous. Like at the end, he's like, is that helpful? That's not helpful. That's absolutely amazing. Thank you for complete generosity to contribute to the community. It's absolutely beautiful. I went ahead, gave you upload access to the channel. You could upload these clips, post them into the Discord, and then we'll also work on getting them on to the website. And this right here is kind of one of those things, or maybe it doesn't come into that, but all these things that we also get to talk about in here. And for example, I'm going to highlight one of the conversations taking place this morning regarding like maybe those in different countries in Europe who are trading off a base account, not in dollars, but in euros or pounds. Like the dev team is going ahead and they're talking about like working on building tools to have not ChatGPT, which we can't put our information onto that public or private even server, but an in-house CTM chat. We just left for a second. We'll make sure that we're back, and then get all that relevant information just pulled up. I mean, so it's important to talk about all this stuff and share it together. The question was, right, according to my script, 8-hour Ethereum stop loss is 12% from entry. I appreciate that the 8-hour close period or periods is more likely to come before the stop loss gets hit. So I understand that I'm more likely to exit the trade before the 12% on Ethereum stop loss is hit. Interesting, the difference between the stop loss percentage on Ethereum and Bitcoin. I'm assuming this is due to different volatility between the assets and to reduce the risk of being stopped out too early. And if you come over and if you look at Ethereum and you look at Bitcoin, and hold on, I'm getting there, y'all. I'm at my remote office, right? So I'm not on my desktop where I like to work off of. Nevertheless, we put the work in. And Bitcoin trades with a much tighter stop loss. And you can see that what Bitcoin has done in January or in 2023, it's taken over here a few different trades. Let's get it exact, right? So if I come to January, January 1st, we're looking at, excuse me. Why doesn't that feel right? Let me just go to list of trades and check that out. Oh, that's because I'm on Ethereum. I'm like, why doesn't that feel right? Because you're not on Bitcoin. I knew that wasn't right for Bitcoin. So let me come back to 2000 and at the start of the year. And during the start of the year, thus far, Bitcoin has had a total of 4 trades with a 31% profit, right? 2% drawdown. And Ethereum during that same time has taken 2 trades and it's holding one in profit, right? It's holding one open, it's taking one profit for 22%. So during that period, Bitcoin was taking and exiting, taking and exiting, taking and exiting, taking and exiting. Ethereum was pushing and holding the trade. They kind of have different styles on the way that they execute in the market. The fundamentals of the CTM 2.0 strategy is the same, but whether you're trading Cardano, Bitcoin, Ethereum, Tesla, TQQQ, FNGU, or any altcoin, or if you're doing it on the 8-hour or daily, there are different, like it's the same strategy, just with different approaches to it. And what's neat about having the different approaches is that we talk about the beautiful dance, and that the way that together they're able to go ahead and like at different times be making new all account highs, reduce drawdown that way. And it's just the way it is. But to elaborate on that, let me start over here. We have, and when I talk about we, like the hive mind over here is absolutely extraordinary. And the work that has gone into developing these advanced strategies, that we take the best of the best, and that's what CTM trades off of. The Summit team has done extraordinary work. Part of that work here is on Bitcoin, we have 6 highly valued candidates. Having to decide which was our preferred version is no easy feat. And I'm going to show you why in a second. CTM, right? This is CTM Classic. If you're looking back over here, this is, by the way, we're going to start looking at 2021. So you're looking at the last 2 years. A lot of people would be very happy with a 26% drawdown and 124% gain on Bitcoin in the last 2 years. Why we have 6 highly valued versions, and they all do different things. For example, this version over here, CTM Classic, why we looked at Bitcoin going ahead with our preferred setting, our preferred version, taking 3 trades for that 32% gain in 2023, the way that CTM Classic did it was different, right? And you could see that it had that one big trade of 34% instead of 3 trades to equal the same percentage. So this would be holding on to trades a lot longer, CTM Classic. But the way that we're looking and we're using BTC 104, the way that it does it was a lot different, right? So for us, it really came down to, out of these 6 versions, it was a hard decision between BTC 102 and BTC 104. You could see in this particular instance, going back 2 years, that BTC 104, it has a 70% drawdown, 538% return. BTC 103 is very similar, right? CTM Classic, and just showing you all the different versions. BTC 100, right? By the way, BTC 102, if you're looking at like the bull of all bulls running and running hard, whether you call it the fourth quarter of 2017, whether you call it the fourth quarter of 2020, in that environment, this candidate puts up the highest returns. And it puts up such high returns that if you go back over a long historical data, its returns overall are going to be tremendous. Now, if at any point in time, maybe someone within the hive mind is able to determine that they would like to use this type of candidate at a certain time, I mean, that's all accessible and that's all possible. But what we tried to do is find the version that in all market conditions, over each quarter, over different slice periods, over the longest period, performs the best. That does not mean the highest overall return. It also means the most consistent and the lowest drawdown. Let's take a look. And let me show you over here. This is going back now over the last year, 2020. This is Bitcoin. And you can see our preferred version over here, 126%, 17% drawdown. CTM Classic, 35%, 26% drawdown. By the way, there will be a lot of people happy throughout 2022 to today to have done a 35% return. Obviously not CTM 2.0 things or CTM things, but still they would be very happy. And you could just see that, you know, the variant, different returns and drawdowns. Coming back a little further to 2020, it's a little neat. You could see Bitcoin 102, which why in the last 2 years hasn't performed well. It makes up for some big gains. Coming back over here, BTC 103 is a high performer, low drawdown. And you could see our preferred version, the one that we all use, BTC 104, it is giving the best performance. Here's CTM Classic, I mean 942%, 26% drawdown. And this is the highest return, but look at the drawdown. Look, this is the highest return in a 3-year period, almost a 2,000% drawdown, but it's a 25% drawdown. You can see over here, I prefer the 1800 with a 17% drawdown. That's much more attractive to me, the lower drawdown. When you're dealing with such high potential returns, it's the drawdown and consistency that becomes important. Look at this. This is going back to 2017. Look at our preferred version, 84,000 with a 17% drawdown. Let's look at that BTC 100. Overall, you could see that the drawdown remains 25%. It's higher than our 17% drawdown, and the return doesn't compare. Here's BTC 102, the other one that it came down to, which do we prefer? Again, the drawdown here, the overall return is almost the same. You can see the overall return is almost the same. The drawdown is almost the same. Yeah, this is lower. But here's the thing. You could see going back to 2017 that between these two, the drawdown and performance is very similar. But if I look at what they're doing year over year, and I come back over here and I show you what happened since 2021, this one's a lot more consistent, right? A lot more consistent. If I go back over the last year, this one is a lot more consistent. If I go back to 2020, yeah. So I'm not interested in we're not interested in what they do over the longest period. We're interested in what they're doing over quarter, year over year. We're looking for consistency, low drawdown, because our returns are more than there. Look at BTC 103. It's very close. Look at the drawdown is the same, almost. The return is almost the same. These are CTM problems, deciding which is our preferred candidate. We got look at CTM Classic over that period. Hey, 26% drawdown's not bad. 60,000% return's not bad. For a lot of people, that would be the work of a lifetime. Hive Mind is absolutely outstandingly incredible. And here's what we're working with. Here's what we're dealing with. And that just gives you a little bit more perspective. And then you can see this is just over since June of 2020, the last 6 months. And we continue to monitor in real time. And again, it's my belief that going forward, all of these candidate templates are going to continue to outperform. And we have, by the way, 9 for Ethereum. We have 6 for Bitcoin. If at any point in time they did not, that would be a red flag. It doesn't matter if it's our preferred version or not. If any one of our candidates was not continuing to outperform, that would be red flag. We would be taking a look here at the summit team, the dev team, and taking that really serious. But that's not what we continue to see. Past performance is not indicative of future results, no way, shape, or form. As it is, and continuing to forward test, our returns continue to be there, and that's beautiful. So, thank you. I wasn't using today. Oh, did it go off? Hold on one second. I just want to see if I could see it. I didn't get a chance to even look at the markets with all of you, talking about that fancy drawing tool. Let me come off, and I'm not seeing why she's not showing. We got her on. Thanks for the assist. These next 2 days, these next 3 days, including today, I'm at remote office. It's a little different. We'll be back in style on Thursday. And by the way, great work pointing out, first of all, what's taking place on the DXY. We're not able only to look for when people don't even want to talk about it because the dollar's going to 120. There's nothing in the way. Oh, well, yeah, well, okay. CTM is like, well, I don't know. What about this like trend line that I see that's going back, to 2008? Do you think we should worry about that? Is that something? Price wound up. I'm on log scale. I could tell. Price wound up, finding resistance there. That's not what we were looking for the top. We're looking for the sell impulse. We took one sell impulse early on. That was over the summer into August. That one was faded, back on the right side. Then we had the next sell impulse come into the market. We took a look at it. Since then, we've been riding it. Now we see over here that price is trading above, and it wasn't for us, just trading above that trend line. We put this hard resistance over here, highlighted in yellow, talked about price needed to get above that for look for a buy impulse to be taking place. Buy impulse taking place. Dollar here strengthening. CTM, trade both sides of the market. Stay on the right side, right? Yeah, I don't know. We just have to stay grounded and work hard and put the work in each and every day and continue to build and work together as a family, as a unit, as this Thai community. Because at the beginning of the stream, when you're like, "Oh, is 85% returns possible?" I mean, it's a little ridiculous to even be looking at those type of bazooka returns. So I guess instead of stay humble, stack sats, stay humble, CTM, let's just keep at it, you know? Yeah, David, I mean, if you go into the member area and you click on in the stock sections and you're clicking on TQQQ, it also has the SQQQ, and then it's going to have both templates for you, right? So this is the inverse over here. Some people can't short on margin, so you could just buy the SQQQ when you have a buy signal, which is basically means that tech is going down, right? In a bear market in 2022, you would see lots of trades occurring on the buy side on this one. I was talking about some tangent. Oh, because JF, that's interesting because for the past couple of weeks, I've been actually doing macro in the beginning of CTM sessions. Yeah. So you're right, covering CTM 2.0 and our positioning is the beginning, but sometimes the macro is kind of more in the focus and we need to also be like on that, and that's a good tip. So looking above though, where we're going over here as I look out on the daily time frame, and I'm just going to pause this 1 second. And then we could see that we have this buy impulse. There's no time yet for us to be looking at this being faded just yet. I could make a couple of observations. If we get back below that yellow line, that would take us from bullish buy impulse to neutral, but we could still come in and retest not only this trend line, this resistance should now be support. So if price fades and we come back down and we test that, we're looking at seeing if that is support. I'm floundering over here trying to get this. Let me go ahead and show the brush again, and here we go. Again, not back. Anyway, this could be support, and then we also have this support over here. So we got a confluence of support. So above this buy impulse, this would be below it neutral, because it's not then bearish right away. You have to get back below this line to see a bearish continuation at this particular point. On the upside, we got a couple of things to worry about. This area I highlighted, it's around 106.50, 107. As we get closer to it, I'll look at it more, right? It's 107.30 in that area. That should be heavy resistance. Heavy resistance. If we got above it, we look above it, but that's heavy resistance. And we'll continue monitoring this along the way. Powell obviously is probably going to run the show tomorrow. It's too soon for us to put in any type of sell impulse yet of when we would be looking. Because if this goes higher, if price goes higher, and then, we see over here, like it breaks down, we could have this is a downtrend. We could have a sell impulse much higher, but it's too soon for that. We'll take it as it comes. We'll make sure that we do our best to stay on the right side no matter what's happening. 10-year is coming into resistance. Above this buy impulse we talked about, that we are overcoming some, let me just extend this line out. and then this horizontal line, right? These two lines. Getting above here, that's a buy impulse. That means we're looking for bonds to continue to be sold, and we're looking for yields to rise. Right now, we're coming into a big confluence of resistance. Again, tomorrow's a big day because the chairman of the Federal Reserve, the central bank that runs the policy of the reserve currency of the world in this central banking system, is speaking. Like it or not, that's what matters. And this could be rejected or we could get above. So it's a pivotal point. This is what we do. It's how we stay on the right side. Oil over here, we had that big and we were there to stay on both sides. Buy impulse, we took it. Sell impulse, we took it. Staying on the right side. This is good news though for those that are looking for deflationary pressures to potentially continue to pick up momentum. We'll continue watching that. I don't need to get into that or build off that today. I do want to look at the NASDAQ and by the way, I'm going to say it. I just want anyone who's new and just joining us, I want you to know when I make a mistake in my TA, in my analysis, I actually focus in on a lot on that because I'm looking to learn, I'm looking to do better. So I pay attention to when I get it wrong and I pay attention really hard to it because I figure if I could work on improving that, then I'm making massive gains going forward on everything else. But at the same time, we also got to talk about then when we get it right, right? So not only on the break of the trend line over here saying, well, that's a strong repair in the markets, right? That means that we got to be looking at the buy side here. And then we talked about, well, as long as we don't break below that channel support, that buy remains strongly in place. Breaking below it would take us neutral, just as we looked at on the DXY together, right? And then it would be the trend line over here. As long as that holds, we're okay. Breaking down below it, that's bearish. But we also talked about, as we broke out of the channel to the upside, I drew in these two lines with you, the resistance, and then I drew in the horizontal 2 lines over you. That is good TA. That's exactly where price peaked out. And it found resistance. It then came up, it found resistance off our lower trend line, horizontal line of resistance. And now what's it doing? Well, it's kind of consolidating under this area. If I don't know yet where I'd be looking for a bearish continuation. So I want to know that. So obviously if I extend this channel support with you out, right, that line is still very much in play. And why we're above it, this very positive repair that took place in the markets, January the 23rd, is still very much in play. Breaking below that would be a warning sign that we're looking for a bigger correction. And whether or not we're able to find support or not, probably around where the mouse is right now, 11,600, and up above this trend line, we'll be looking at it. But above this trend line, this buy repair continues to take hold. We're consolidating below resistance right now. Market's waiting on Powell. This is the line. Break below it. Then we're looking for a bigger correction. That is the best look I could continue to give at us right now. And right now, this is resistance above. We have to wait until we clear above 13,000 on the NASDAQ to be looking for further upside gains. We are consolidating on resistance. By the way, that's all for fun. That is all CTM 1.0 style TA. That takes place in our daily training sessions as we looked at the DXY, as we put it together, as we continue to do each and every day. That's where all of that is continued to be embraced, to perfected, to learned. Now, if you're trading systematically and you're looking for when the next entry is, right? You're just waiting for the next entry over here, whether it's on the TQQQ, Tesla's holding a position, or on the FNGU to get into the next trade. Anyway, friends, family, thanks for today's session. If you're watching this out on the replay, go ahead, spread the love, smash that like button. If you're watching this session live on a mobile on your way out, please go ahead and do the same thing. That's a good way to start the week, CTM, and that's what we do each and every day. I'll see you all tomorrow, everyone. Have a beautiful day. God bless you, and I'll see you on the inside. We were just looking at the SQQQ. That's TQQQ right here. So, very good. You're saying if we saw the breakdown on the NASDAQ and you're looking for the next potential entry to go short or long on the SQQQ, right? This would be triggering that entry. Good clarification there. Thank you for that, Gabe. Really good stuff. Everyone, thank you, CTM. Thank you for making this such a beautiful, beautiful, beautiful thing that we get to share together. Have a beautiful day, everyone.